Nothing like confirming that you're right. When I launched this reverse mortgage podcast, I did this because I'm a real estate broker, and I was shocked at how many people qualified first mortgages that weren't taking them, could have taken them, and should have. My estimate was about 10 times as many. And so along the way, I've had the opportunity in this podcast to meet great originators and executives from companies, and I had the chance previously. We have back today Tom Evans, who's an EVP, which sounds very important, at one of the leading reverse lender, one of the largest lenders in the country, as well as one of the leading reverse lenders, Fairway Home Mortgage, recently rebranded. Tom, thank you so much for joining us today. We're talking briefly about how big this opportunity is. That's why I launched this. You're the head of both marketing and technology. Sounds like that's your problem. So what do we do to help realtors learn about the opportunity that so many buyers are missing, or how do we get them to spread out to take advantage of this tool in a market that people talk about being difficult?
Bill, that's a great question. And thank you for having me. I'm really thrilled to be here again. It's always a fun conversation. Yes, as you mentioned, the market opportunity in the 55 plus / 60 plus space right now is just insane. NAR released a report this year for last year's performance that said that 46% of home buyers are over the age of 60. And that's half the market. When you look at the number of transactions that were done across the whole country, you're talking about 2.2 million probably that were folks over the age of 60. Now, the interesting piece of that puzzle is that, yes, you might think that a lot of them are just doing a cash for cash exchange, right? They're selling their home, they're downsizing, they're buying another home with cash, which we can discuss the wisdom of doing that for sure. As a financial professional, I'm sure you have plenty to add there, but still about 60% of them are actually financing their home with a conventional mortgage and then having to make monthly mortgage payments, which has a legacy impact, which has a retirement savings impact, and which absolutely has a cash flow impact. I think I mentioned to you in our last conversation that my parents recently got a HECM for purchase. And it was great because I got to do a live webinar with them just last week where they shared their experience. And I was kind of surprised at, my father is a very well-spoken man. I look up to him. I want to one day be as cool and smart as he is. But, he kind of jumped right out with a soundbite that I just thought was astonishing in its aptitude. He said, we didn't have to deplete our savings. The reverse mortgage gave us enough to pay off our conventional mortgage and still have what we needed for this house. We moved to be closer to our kids. Now, it's my sisters, not me, but I don't mind that too much. And just going from a conventional mortgage to another conventional mortgage and putting out a large outlay every month wasn't very appealing. The H4P opened up our search to a higher level. We could stop looking in the lower numbers and start looking in the higher numbers. So you have 46% of the market out there that has an opportunity to benefit by getting a house that's $100,000 to $200,000 to $300,000 more than the home that they think they can afford. And you're right, we're just not tapping it. And I'm every day I wake up and I go, how do we do better today to hit these folks and get them excited? And, honestly, one of the solutions has been very analog. I'm the VP of technology, but kind of trying to take a very simple technology platform and marry it to an analog presentation where we're just getting in front of as many realtors as we can and asking them, hey, did you have a open house this week? Yes. Great. How many of the people that showed up for that open house couldn't afford the house they were looking at? Most of them. If you gave them an extra $100,000 or $200,000, could they have afforded that house? Yes. Simple math, right? The equation's there.
It's interesting because so much of the real estate industry press, and as a result, I believe management attention is focused on first-time home buyers, and I think on buyers as opposed to sellers.
Right.
And I've always said that as a business, the business of real estate sales really is listings, selling houses. The buyers who buy it, it's kind of like you manufacture cars, you have to make the cars. Yes, buyers sell them, but you have to make great cars in order to be in business. And I think in real estate, we focus much on buyers, and then it's very fun to think about the first-time buyers. We all reflect back on when we bought our first house. But the problem is by not serving the seniors, they're not moving in the numbers they used to.
Right.
They're either locked in, they think they're locked in because of a refinance. They can't afford the house because, like you say, they're shopping for the wrong dollar amount. They're off by 30, 40%. They don't want to make a payment when they don't need to. And to me, it seems like this just solves so many problems in our industry. And I think the challenge, though, as you point out, though, the only solution is the face-to-face, belly-to-belly, one customer at a time, walking them through the process. I know that a lot of it is the bad reputation that the original reverse mortgages shed over the industry. I said shed, S-H-E-D, like hair. So obviously you must have given thought to this marketing-wise, and I know you guys, as a company, you guys support your originators with a lot of market material. How do we get the message about this product? This is not the reverse mortgage of the 1980s. This is a very sophisticated tool that for the right person can really make dramatic changes. What's the strategy at Fairway as far as helping engage your originators and giving the tools to go to the marketplace to help move these ideas, besides my podcast, which I appreciate?
And I absolutely appreciate being here. It's a big piece of the puzzle. I mean, you have an audience, and we have to talk to that audience. I think that in today's social media culture, everyone has a very limited attention span, and it takes a lot of quality video repeatedly to get in front of folks. I started a series called Boom Movers a couple of months ago, but now I'm actually working on new stuff that's strictly just very down to brass tacks, that addresses some of the myths and misperceptions that are out there. What I found, and I asked a room full of realtors this question on Thursday, I said, why do you hate reverse mortgages? You're all here in the room and we're already ahead of the game, right? But why do you hate them? Because I guarantee that 90% of you are going to walk out of this training and probably still not necessarily do a reverse mortgage with one of your clients.
What's to hate? How can you even say
I
that?
agree. But
and I would do them. I'll get you paid by them. How can you hate something that empowers your customer and then we have to make a payment? Like, what's better than that? I'm just curious.
Exactly. And so it was interesting to hear the feedback. And there was some younger real estate professionals in the room that did not seem to have those negative stereotypes applied to the loan. Our market is shifting very radically. When you think about the fact that new reverse mortgage customers are now going to be Gen X, not boomers. I mean, and Gen X folks are not debt adverse. We're not tech averse. We're very focused on living the best lifestyle we can within our means, but also understand that our house can be a vehicle for us to gain more wealth in other areas. So the same things pop up all the time. People think they're going to lose the new home they're purchasing if they buy with a reverse mortgage. And I just said to them, why do you think that happens? Why would that happen? Well, if you don't pay your taxes and insurance, you can lose your house. I said, if you don't pay your taxes and insurance and you own your house outright, you're going to lose your house, right? So that has nothing to do with the financing vehicle. And it's the same with a conventional mortgage. You have to pay your HOA, you have to pay your taxes, you have to pay your insurance. So how do you think the house can be lost? And what usually comes up is, well, it's getting lost from the generational wealth. It's getting lost from the legacy that would be left. And I said, okay, let's address that. My parents are fairly savvy. My dad ran his own companies. He was a salesperson for a long time. He was focused on leaving a retirement legacy for himself. And my mom also worked all these years. She's a project manager. She's brilliant. Keeps me accountable on a lot of things, and I appreciate that. But the two of them together wanted to make sure that they could leave us a legacy. However, they still thought it was a better idea to get this reverse mortgage for purchase because it got them into a bigger home and allows them to keep more of their retirement funds in their retirement funds. They don't have to worry about tapping that money. With a reverse mortgage for purchase, you can also make optional payments if you want to do that. But instead, they're choosing to hold on to more of that cash now and live their legacy with us while we're alive, and also still be able to leave us a legacy down the line because they're preserving their other funding to have that available when they pass. Most people think that the only way I can leave money is to leave my home. And that's true in some cases, but they're very rare when it's actually the only asset available to the family. And you're wearing down all of your other assets to preserve equity in a home that could be your single biggest illiquid cash asset.
So how do you see, obviously you have an interesting title to me. I find it fascinating. You're EVP of Marketing and Technology. Does that then speak to that at Fairway technology is the primary marketing tool, or that technology is primarily used for marketing? Or how do you see? Give a little bit, because we had a number of Fairway originators on here, and you guys are a big company. Talk a little bit about Fairway's approach to marketing technology and how you fit in and kind of drive that train.
That's a great question. I think, one of the things that most real estate professionals and builder agents get confused on is I don't want to have to go and use a specialized calculator on a specialized website. They generally understand basic mortgage principles. If someone puts down 20%, they can actually usually, I mean, most of us can calculate a payment in their head, right? Well, the rates are about this, so you're going to pay about that. They get a little challenged when they have to do that with a reverse mortgage because people don't keep the PLFs in their head. So a technology tool that we're working on rolling out as we speak is actually a very simplified H4P snapshot app, which allows a builder agent to be sitting with a customer and pop on their phone and say, okay, how old are you? How much cash do you have to buy this house? Great. Here's how much extra cash you could get. That's the whole equation, right? Your new purchase price is this. So, if you have somebody who's got, they're 75 and they have a $300,000 cash outlay available for their new home. Okay, you could actually get a $475,000 house or afford a $175,000 package upgrade on this new home that we're building for you. Right. So that's a very small piece of technology, but it's a gap, and we're trying to fill that gap. And then the social media side of things, which is interesting. Video at its heart is analog. You're connecting with people, you're trying to tell a story. I mean, this podcast is in a way analog, right? But think about all the technology that goes behind it and getting it in front of people, right? You do that all the time, Bill. Right. So we have to maximize those systems as well. And, with AI these days, it's a lot, we're in a new world where we can actually discover positioning and placement and strategy that we didn't necessarily have easy access to before. And a lot of the metric tools that we're reliant on, sort of older technology, they're all getting freshened now, which gives us a better idea of exactly how we're performing where and when.
Right. In the area of technology, I don't think, at least as I sit, and I'll criticize the company I'm affiliated with, which is EXP. We used to consider ourselves a technology company. I don't think that we're doing a very good job of guiding our agents, and I think this is true industry-wide, not just EXP, but industry-wide, through the AI transition landscape. I think it's obviously tremendously impactful at the corporate level and the operational level and the backroom operations and accounting, and we have large-scale numbers of operations being done. Technology is critical. And I think that oftentimes originators at the front line and real estate agents at the front line are overwhelmed with, well, I'm supposed to be transforming my business to everything digital, yet we're really, as you say, the analog facing business. And so my goal is really to eliminate everything else I do but talk to my customer. And it seems like all the technology is being oriented to eliminating discussion with the customer. Here's a great chat robot that will ask all your customer all the questions that you should be asking them. Well, there's no chat robot in the world that's going to do as good a job with me, with my target audience. They might do well with the whole population. They might kill me on the whole thing, and they're available 24/7. And I think that's where we're being misled. So talk a little bit about how does Fairway guide its originators, and how would you kind of, industry-wide, if you're an originator in the field, not the VP of marketing and technology, but how would you advise a friend who's an originator or a real estate agent to integrate the tremendous transformational change taking place without getting distracted with things that really aren't appropriate for them?
I think that AI can serve an originator as almost like a cybernetic overlay, if you will, right? I mean, if you imagine, if I had an exoskeleton that I could wear, to get very technical, that maximizes my strength, that wraps around my physical arms, but allows me to swing the bat harder or throw the ball farther, that's what AI can do for you, because there are tools out there that will allow you to do your research more quickly, that will allow you to find your potential prospects more easily, that will allow you to do silly things like actually get their email address and phone number, and can help you draft your email content to them. However, at the end of the day, the originator is always the key component to the conversation. Most folks are not quite ready to just throw all caution to the winds and assume that a computer is going to help them get what they need out of their long-term financial planning. They want a human being involved in that because, I mean, ChatGPT says on every screen, we can make mistakes, right? They specifically say that. And we have to keep that in mind. Now, humans can make mistakes too, but we have decades of experience to lean on and can turn that into the empathy needed. Now, I'm sure that that's something OpenAI is working on all the time, that Claude's working on all the time, that Grok is working on all the time to create that illusion of empathy. But the fact of the matter is that when we're in the trenches, the customers want that connection. They want to know that they can pick up the phone and get a question answered from a person who has been through it. And they also want to hear from customers that have also been through it. So those things are always going to need that human element. But like you said earlier, Bill, let the tools do all the other stuff. You know, if you spend an hour reading through a document set to check it for errors, that's not a good use of your time. You know, you're a people person. You should be on the phone with people. You should be in people's living rooms. And that's the other cool thing about Fairway is that Fairway is always going to be a boots on the ground organization. We are about being in your local market. We are about coming and talking to you. If you want to do business over the phone, we can do that also. But if you need to walk into a branch, you can do that too. Yeah. And if you think about it, on the reverse mortgage side, that branch-based sale went away when Bank of America and Wells Fargo went out of the business, right? So Fairway is one of the few companies that can still do that kitchen table sale if that's what you would like. We do have to be aware, though, that as I mentioned, the demographic is shifting, and we have to make sure that we're facilitating all of our customers. So if a borrower wants a mostly digital experience until they're ready to actually talk to someone about how to sign those documents, we have to be able to provide that as well. And that's something that Fairway is focused on growing into as well. And, you know, the tool sets have always been a little complicated because most of the larger technology providers are, for some reason, afraid to invest in reverse mortgage overlays for their platforms. And I would just say to ICE, like I love ICE. I work with a lot of guys over there, a lot of ladies too. Hey, ICE, 46% of the buyers could be in this product suite if we stop building walls against them getting it, right? And if they're in and they're able to use your platform, we're making more transactions, which allows us to get more funds into your organization to continue to improve your technology. So we're at a precipice where I think everybody needs to understand that an aging population plus a growing potential retirement crisis plus the changes in technology, we're going to have to facilitate moving to this customer base and making things easier for them any way we can.
I feel like your industry is in a moment kind of like where McDonald's was back in the days when they used to only have burgers and fries and sandwiches, lunch and dinner, and they kind of got forced into breakfast, and now they're the world's largest, I think, seller of coffee. I think they sell more coffee than Starbucks.
Yeah, the cafe.
They already had the stores, right? And to use that analogy, Fairway already has great local originators. I mean, I've known a Fairway originator. I'm here in West LA now. I've been in Diamond Bar, Covina area. I've known good Fairway originators. The first originator I met who was a specialist in reverse was with Fairway. So you guys have had that retail presence. So let me just kind of ask, whether it be company-wide or industry-wide, my rough calculation is, as an industry, we should be doing about 10 times as many reverse mortgages as we are now. Meaning cash buyers should be getting at least a line of credit, if not some money at a reverse mortgage. Seniors getting, as you mentioned, forward mortgages should consider reverses, at least consider them. If they all consider them, if every one of them considered them, I think 10 times as many would go reverse. But it seems like we've created this wall. And I think, I'm not in your business, but my sense of it is the originators who are doing well and who are in this space and specialize and do well are doing really well. And they have their referral sources and that business comes into them. What you don't have, what I don't see, are the new, young, hungry, outworking, expanding that market in the education to new referral sources, new realtors, new financial planners, new lenders. And you guys have this army of originators.
Yep.
And that's just you, Fairway. That's you, the industry. So, maybe you're not, maybe you are. I'm not, and you don't have to disclose this if it's personal, but it just seems to me, what's the industry doing, or maybe what's Fairway doing to help grow the army or arm the ones you have with these tools? Because to me, it just seems like his business is waiting to be taken down.
I think one of the things that we need to do is delineate between the lower hanging fruit. And I don't cheapen it in saying that. I know getting any buyer on the line and getting a buyer financed is not an easy process. If it was, everybody would be a loan officer, right? It's a challenge. You have to find that business. But the HECM for purchase customer is a much simpler transaction than someone that you're trying to talk to about sequence of returns risk. and their third bucket for retirement, or their third leg of the stool, to quote Mr. Selleck, right? The irony is, and I say this, so about 25 days from now is my 20th anniversary in the business, Bill. And I can't believe that's happening, but it is. And I truly think that while we have done a great service to a great many people in that 20-year span, we have also focused our sale on the most complicated piece of the puzzle. We are trying to sell someone who has already paid off a large portion of their home an opportunity to give that money back into liquidity, but also to take on debt that they weren't taking on before. A home buyer is already prepared to take on debt in 60% of the cases. They know what a mortgage is. They understand that in order to buy this house, unless they have the cash available, they're going to have to take some financing on. So if they're already prepared for financing, I think we have to get out of this space where we're saying, do you want a forward mortgage or do you want a reverse mortgage? And just say, how can we help you finance your home? Would you like to make payments or not? Would you like to defer those payments or make them optional? How do you want to structure your loan? Because if legacy is important to you, we can give you a strategy to preserve legacy. If you want to just do a conventional forward loan, sure, Fairway can do all of that. And that's the beauty of Fairway. I mean, we really truly can put the person in the best product that fits them the best. If they're a veteran, we have programs. If they are looking at a rural property, we have programs. If they're a first-time home buyer, even later in life, we have programs. So we can really service the 55 plus crowd in a way that no other lender can, and we want to. So that's really our mission internally, is to get more people aware of that easier side of the transaction. Fairway can close business very quickly on the purchase side. And considering the customer is actually putting down more money in most cases, it's probably the second most secure transaction after cash. So if we can close in 15 days, give you a very secure transaction that's almost as sure as cash, and we can get your customer more house, where is the drop off? There is no liability there. And that's my job, to get people to stop thinking about liability in this product.
Well, as a listing agent representing sellers, if I got a reverse for purchase or HECM for purchase offer from one of the larger reverse only lenders, I don't think, I'm going to obviously present it, but I'm going to say to my customer, I don't know how many they do purchase wise, and they don't live in the purchase world where that's their reputation and their business, whereas Fairway does. Yes. And if Fairway originator called me up, it's a whole different experience. You guys aren't going to put your reputation on the line frivolously. And you're not going to drag me out just because you got another reverse mortgage in your bank. You guys are built on working with and supporting the local real estate community. So I think that's a great spot for you guys to focus on. The H4P makes sense in that it's an easier sell. And of course, the buyer of that loan, I guess, the borrower of that loan, the buyer, they might later refinance and get a bigger reverse. They might find it fits the reverse mortgage, estate planning program down the road, or 5 years later redo it. But at least now they're comfortable with the process and they have an originator they have a relationship with.
And I agree. And I think we also love to kind of combine both of those things in one. Once we're talking to a borrower, to say to them, hey, you have this much cash available, but it looks like you don't want to buy a house that maxes out all that cash. Would you like to keep some of that cash in hand, or would you like to overfund your purchase and build that credit line? Because that credit line grows at the same rate as the interest rate on the loan. Right. So, folks are buying a new home and ending up with $1 million credit line, in the later years of their life. Like, that's a win-win on every level. So I agree with you. One thing I want to just point out quickly is that you mentioned that Fairway is so purchase oriented, and we are. And I don't know if people know this, and it's one of my very most proud statements about Fairway is that Steve Jacobson, who is the president of our company, is on an email box for closings. Closing 911, it's called. And I'm probably spilling some secrets here, but Steve sees every email that comes in there. So his goal is to make sure we close on time every time. And if we don't, we fix it. And the times we have to fix it is very rare. So the fact that Fairway is so focused on helping people close loans quickly, easily, on time, that is such a huge advantage over speaking to, another larger reverse mortgage company that mostly does those refinances. We know how to get a loan closed to get people keys. Keys is at the end of the day, right?
The call center mortgage. I mean, when the offer comes in, as a listing agent, I'm always talking the buyer's agent out of using them, because I say, listen, you're not going to get paid, because what's going to happen is your buyers are going to get. I'm tough on the process, unless they're the only buyer on the deal. But generally, if it's competitive, we're going to push you aside if you don't perform. And 1-800 we have the lowest rate mortgage.com. Believe me, they're not going to deliver on time. That's just that it doesn't work that way in life. I promise you. Now, if rates go down, they'll deliver that rate. But if rates go up or stay the same, you're not getting that rate. Your customer's not going to be happy, and they're not going to perform. So this brings me to kind of the next point, and one of the other reason I launched this podcast was, and it's not Fairway, but the challenge of the reverse mortgage is the borrowers end up leaving, more likely to die. Like of all the mortgage products, likely to have your borrower die, I imagine, is a reverse mortgage compared to an FHA.
That's fair. That's
right?
fair.
Or I guess VA to active duty maybe in the time of war, but we're not there. So you have more challenges in that. You're going to deal with more transition of ownership issues than Ford mortgages are. And I think the nature of reverse mortgage, because the payment's not being made, there's this false perception there's no need to make a payment. Well, there isn't, as long as it's their primary residence, blah, 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 blah. But now that they've passed, there is. And so to me, the other reason I launched this podcast was what I call reverse mortgage SOS, where mom and dad passed. There's 3 kids, one's living in the house. He doesn't know there's a mortgage because they have a line of credit now, or they paid it back, or maybe there's no payment due, and he's throwing the statements away. He hasn't recognized the company. And all of a sudden they get posted for foreclosure. And the property is not owned by the family. You have to go through that transition and such. And it seems to me that this is part of, forward mortgage lenders have the problem of being transaction oriented, where they look at each mortgage as just a transaction or a referral from the realtor. They don't really establish a long-term relationship with the customer. And you can't really churn your own pipeline of refinances because it kind of undermines the company, and there's rules on that.
Right.
And so it's almost like dissuasion to keep in touch with the customers. Yet on reverse mortgages, we have to do a better job of this handoff process. This is what's really hurt the reputation. I think this is the opportunity for service-oriented companies to step up and excel. Any ideas or thoughts on how your originators in the reverse space can take this to their advantage rather than, obviously, you don't want to tarnish your company's reputation. You guys' branding is very important to you.
100%. And we touched on this in our previous conversation too, and I'm glad you brought it back up. When we spoke last time, I mentioned that we were adding staff to handle just that. And, there's 2 pieces of the puzzle. There's the basic bare bones, how do I manage my mortgage? What do I expect after closing piece that the servicers generally are not able to do on scale. The servicers are going to do the key thing that they're supposed to do, which is manage the loan, make sure you get your payments, et cetera. And they're going to send you mail that may be confusing. And it's up to us to educate the borrower ahead of time to make sure they're aware of that. We actually just had a summit with our top producing loan officers to talk through these issues specifically. Obviously the legislation about trigger leads may have some bearing on this as it moves forward, but the deluge of mail that our borrowers receive actually is almost a second full-time job for our originators that do scale, because they're managing those expectations and helping the borrowers understand what's happening when they're receiving a piece of mail. We are, as I mentioned to you before, we are staffing up to continue to support that. Even though we don't service our own loans at Fairway, we are making sure that we have people that are available on the phone. Fairway has another servicing 911 group that's amazing. And we have such a large portfolio, and that group jumps in to help everything. So we're expanding that department to have reverse mortgage specific experts there. But as an industry as a whole, I think we need to continue to truly be understanding of how confusing it can be to be in that position, whether you're an heir during the handoff process or whether you're just a senior who is in the loan and is receiving something that says you need to validate your insurance. And they're like, well, I paid my insurance. What is this? I don't understand this. Small step aside for a second, I actually think, and I've encouraged this before, for folks that are looking to build a credit line or are not looking for a significant cash outlay up front with their reverse mortgage, taking the LISA, which is a life expectancy set aside, to essentially make sure your taxes and insurance are always covered is a great idea. I actually kind of renamed that a life emergency savings account, right? So if something were to come up down the road, you wouldn't have to worry about it. You're in your house forever because you know your taxes and insurance are always covered. But that aside, when we're looking at the transitional phase, I think that it is rough when an heir is not even aware that the property has a reverse mortgage on it. And unfortunately, we're not always notified immediately when the borrower does pass. We are constantly trying to put out, actually right now, we're working on some new video material that's designed for the heirs. So, sort of a, in case of emergency, press here option that allows them to have everything in one place and just shows them, hey, we're sorry that you're going through this moment, but here's how to easily handle it. So we're hopeful that that will take us a step in the right direction. But you're right, when it comes to reputational risk, that is one of the single biggest places. And there are so many pieces of that puzzle that can be challenging. Even if you're going to do deed in lieu and you're just going to hand over the home, there's still stuff that you need to know about when FHA is going to come in and winterize that home, and are they going to turn off the water, and when do you have to get stuff out of it? And we always need to do better at supporting that transition of the loan. You're right, it's not a one and done sale. You have to be prepared that customer and their family are part of your life for the rest of their lives and beyond.
Well, I think that's both the challenge and the opportunity for originators building a business, because if it gets down to just triggering people's activity on internet or ChatGPT, Google, Facebook, Grok, they're all going to kill us.
Yeah.
But if you want to get between me and my customer, good luck. If I've done my job, they're going to listen to your pitch from Facebook or Google, and they're going to hang up the phone, call me, and say, "Hey, Google says I can save money here. What do you think?" And they've kind of pre-sold me on what I have to do. That's how I look at Zillow when I talk to sellers. They go online, they look at the comps, they look at the value. They're like a little pre-trained for me. I say, "Thank you, Zillow," but there's no way my customer is going to list with Zillow, given my particular niche and expertise. And I think as originators, that's their opportunity. So I know that some products require an annual form by the consumer.
Yes.
And I got to tell you, I've done 25 interviews with originators. You're not that category, but people on your team and at Fairway included. And the top ones talk about that like it's one of their goals in life is to have as many of those as possible. And it's interesting how the ones who are less producing, it's like an administrative thing they have to do. And I love to embarrass them on the show and just say, how many reverse mortgages have you done? Because if you've done 200, that's one per workday. That's one
Right.
phone call to a past client who you got paid a lot of money for to keep the relationship so that when they pass, you work with the kids to get the house sold or get whatever else. What else are you doing that's more important if you're still in business? And so my goal would be that a company like Fairway should say, like, you get half your commission at close and the rest is spread out yearly. Or Steve can look at those emails, and if the customer says, haven't heard from my originator in over a year, he just comes out and shoots them dead. I think that would be a great program.
You'll get paid $35 a month from us to service that loan for life.
Something
right?
like that. I don't know. There's got to be some answer, or just a stick or something you beat them with. I don't know.
That's a really
Why
fun
would you
idea.
not call your customer every year? I don't get it.
No, I totally agree. And I mean, it is such a, when you're very successful, you're doing 50 or 60 of these a year, right? And you know that a lot of your customers are not going to be around that much longer too. So
Right.
I do think, to your point, but this is really important because the demographic of the borrower is youthening, if that's a word, right? So it's not a question. Like, the life expectancy on a reverse mortgage had been 7 years. I think that we're going to see that dramatically grow. And I think that's going to have an impact on the market. A big part of why these loans are lucrative in the secondary market is because they have a limited lifespan. People know when they're going to collect. And if that lifespan starts becoming 15, 20 years or a 30-year loan, at that point, we have to start thinking seriously about how the markets line up against each other. But that may be a good thing at the end of the day, because it might help streamline and stop getting people thinking that these are two radically different, product bases.
Well, plus you do servicing income for a longer period of time. I could see why there are some services who would love if they could just double the length of the portfolio. I think there's some that would love it. And I think the other thing that I tell people and say, well, I called, I found out they'd pass. Like, well, that's great, because now you can help them. Like, what are they doing with the house? And don't realtors you're trying to get business from who would love to help go through those problems or those challenges, or one's passed and now now it's just the widow and she's scared and she doesn't know how to handle these things. Isn't that a great chance to strengthen your relationship? So I don't know. That's been one of my soapboxes since I started this.
From a technology perspective, I don't mean to cut you off, but I do think it's important that if you have a CRM system and you're able to dial into actual life event intelligence on your borrowers, That's smart. I mean,
Yeah.
it's always great if you're making a phone call and finding out that someone has passed, but if you are able to find out immediately and reach out and say, "I'm so sorry for your loss. We heard this happen. We're here for you to support you through this transition."
Right.
That's very different than calling someone and asking for someone and having them say, "Oh, they died." So you want to find a balance there, and technology can help with that. Um, but I absolutely agree with you. There's so much opportunity when the loan does transition in any way. If there are heirs who would like to refinance the home, there's a transaction there.
Right.
If they want to sell the home, there's an opportunity for their realtor partners to step in and do that. You mentioned sellers earlier, and I did want to mention that one of the things I think we need to do on the education side to help with creating a bigger seller market is educating people who think they're stuck because of rate or because of uh, their home value. Because if they have this additional purchase power, we actually find, you'll laugh when I tell you this, a lot of people that reach out to us to get a traditional reverse mortgage end up getting an H for P because they then realize that it's not so much about wanting to stay in the home. It's about, I have an opportunity to get a better home.
Yes.
Okay, I'll take that opportunity. They're not aware because they don't know they have that extra purchase power. So now you've created an opportunity for that home to go on the market and hopefully get a first-time home buyer into it. I was shocked in this NAR data that the average age of a second home buyer is 61. Like, how crazy is that? The average age of a first-time home buyer is going up too. It's like in the high 30s now. It used to be much
Yeah.
lower than that.
Yeah.
So people are staying in their homes longer than we think. And I think they're staying because they're securing these low interest rates and assuming they're going to be set for life. But there's still stuff that's going to pop up. And the fact of the matter is that no one is in the same position 10 years after they buy their home that they thought they were going to be in when they bought their home. No one. Something changes for all of us. So the decision to move closer to aging parents or to family or better climate or a single story home, like these things are very much necessary discussions to have. And if you're reaching out to your customers every year, you can have that discussion with them,
Right.
and ask them if they've thought about those things.
Right. Because if you're looking at basically transferring your mortgage, sell a house here, go there, same mortgage from 3% to 6%, you're gonna double your payment. Who the hell wants to do that? But you're saying I can go there and have no payment. Well,
Yep.
hold on. Yeah, it's a higher rate, but that's down the road, and there's some other flexibility and reasons. And I do think that maybe from technology, I don't know if there's a limit to that annual statement process not notifying the originator. It just seems to me the originator should be reaching out to the customer every year with that form and or their interest, the 1099 or 1098, whatever the interest one is, form as well, because they're going to call you if they don't get it. So why not just call them and say, "Hey, did you get it? Here's how you get it. Here's the link to the thing," or "I got an email." Of course, there's privacy and permissions and all that. That's technology stuff. That's your problem. My problem with EVP. I'm just a salesman, but it just seems to me that somehow that technology we use so much to protect ourselves. We need to also empower our customers, and I think that that annual requirement is also an annual opportunity to develop those relationships. So I just urge all the originators on here to continue. Hey, look, Tom, I know I've gone long here with you. I really appreciate your time. I know you have other things to do, but you got a big
I love
title, so
talking
you
with
better
you,
have something
Bill.
else to do besides talk to me. But
No,
I
it's
just want to
great.
thank you.
Great.
I just want to thank you on behalf of your originators and the industry in general. I think you guys hold a high bar, and as far as having specialized reverse mortgage originators, I think that's great. Your website, I know that if people want more information, then go to fairwayreverse.com. You have a whole website that's focused on the reverse side of the business.
Yep.
And then I know you do got content. Talk a little bit about your content. You mentioned you're changing it. So where can people find your new stuff that they're looking for?
Oh, I mean, this is a great place to start. We're always adapting and developing new stuff. Keep an eye on our social media feeds as well. We're starting to grow into TikTok and other channels as well because our borrowers are getting younger. The one other thing that's on this site that might be fun for folks to check out, Bill, if they haven't, there's a tool called Mortgage Builder, which was on the homepage that you were just on a second ago. Up the top there, if you click on Try It Free Today, Mortgage Builder is an opportunity to actually get an affordability comparison between a forward loan and a reverse loan to sort of show you what you could be seeing. So no reason to run through it now, but I strongly suggest that people do check it out. You can also go directly to mtgbldr.ai, and it will take you right to that tool as well.
Whoa,
So it's a fun way to see how things
mtgbldr.ai.
Yep.
There you go.
There you go.
Beautiful.
Thank you,
Well,
sir.
look, Tom, again, I know you guys have a huge operation, both on the forward and the reverse side. Really appreciate the chance to chat with you today and learn more about it. And thank you so much for supporting the podcast. Appreciate you.
Thank you. It's been great to be here, and good luck to everybody. Enjoy the rest of the year. Let's go get them.
Thanks so much. Hey, I'm Bill Gross. This is the Reverse Mortgage Podcast. We get together every week with a new episode, mostly commonly with the reverse mortgage originators, in this case, top management from one of the largest in the country. Really, I hope you find it as interesting as I did. If I can help, please reach out at Bill Gross Probate on social media. Call, text, or email if I can help in any way. And as always, make today your best day ever. Thanks so much.